One of the things that we always have to have in check when dealing with crypto or any investment whatsoever is our biases. And by investment, I'm talking about even relationships. Once you have a bias, you are doomed for failure. Now, this means you will not see things as clearly as someone who has no bias whatsoever. For example, let's say you like this girl or guy and you want to be with him or her. Your likeness for this person will stop you from seeing what you should be seeing, what is right in front of you. It all goes the same with investing in crypto. Now, we have been talking about Bitcoin going down to 20K for some time now and even going below 20K. So the question is, do we just want it to go to 20K, or are the charts saying that it will go to 20K? And yes, as we all know, the charts indicate that Bitcoin will even go lower than 20K. Now, there are a lot of people who want Bitcoin to go down to 20K and below so that they can make a ton of profits when the markets rise back up. And frankly, if it really goes that low, then we will make a ton of gains. So we have to have our biases in check. We have to always be alert to understand that it is not because we want it to go to 20K that it will go to 20K. It will go to 20K because the charts indicate that it will go down. Now, the reason why I am talking about this is because a lot of people think that I make predictions like I am some prophet or something. I am not. I simply just observe the charts and I say what I think the charts are saying. So at any moment, the charts might start saying something else. Now, the $20,000 prediction was a higher time frame prediction, which means it will take a lot of time for the markets to dump or for BTC to go that low. So we will have price pumps and dumps, and it can really go very high, except it counteracts with the higher time frame prediction. So if we go as high as $51,000 or $52,000 or even $50,000 or $60,000 and the higher time frames still indicate 20,000, then 20,000 it shall be. Now, I have reason to believe that our profit level, because I was saying in my other video that for us to go down to 20K, we will also have to go up, which means we will retest profit levels before going down to 20K and below. And as I was saying, my first profit level will be 47K. I have reasons to believe that it may as well go up as high as 53K. Let's explain. There are some key things that you always have to take into consideration before making any prediction whatsoever about the crypto market. The first is, of course, the Bitcoin chart. Now, Bitcoin chart is simply because Bitcoin occupies majority of the crypto market share. So a lot of the money invested in crypto is in Bitcoin alone. I'm talking about 40% of the entire crypto market. Now, after the Bitcoin chart, we have to look at the dollar chart. This is because Bitcoin is trading directly against the dollar. So the value of one Bitcoin is measured in dollars. I believe that is easily understood, especially for those who always follow up on my predictive analysis videos, because I do a lot of explanations when I do those videos. Now, another thing you have to look at is the entire crypto market chart. So the total crypto market cap chart is what you have to look at, because this chart takes all cryptocurrencies and put them in one chart. So if this chart is bullish, then all cryptocurrencies will rally. Now, some will rally more because of their use cases and adoption, and some will rally less. But generally, the markets will be bullish. And another thing you have to look at, especially for you who are invested in altcoins, is the Bitcoin dominance chart. This chart should tell you if we're going to have an alt season or not. Most people invested in crypto always invest in altcoins. Now, this is simply because most of the gains in crypto will not be made from Bitcoin. Bitcoin takes a lot of time to double in price. So let's start with Bitcoin, shall we? Yes, this is of course the Bitcoin chart, and we are on the daily time frame here. Now, we can see that I have been talking about an inverted head and shoulders pattern for some time now. and yeah, it has been completely formed right here. Now, of course, I always tell you that be careful with head and shoulder patterns. They can easily turn around at any moment and give you a double top. So this may as well come down like this here and form a double top right here, which of course is far from possible as of now, but it is not within the realms of impossibility. Now, as we see here, we hit a resistance level right here, and we will have to surpass it before we continue our road to the upside. But we have one problem. We have been talking about 20K, and there were a lot of reasons why we said that we are going as low as 20K and even below it. But this inverted head and shoulders pattern might invalidate our prediction. Now, we all know the reasons why we were talking about going down to 20K. We had the head and shoulders pattern, a breach of the higher high here, and a confirmation of the downtrend here. Now, this inverted head and shoulders pattern here has a different price target, and if we actually reach this price target, it will invalidate the higher high here. It may as well put us back in an uptrend. I am telling you this now because it is still early to know. However, I have a reason why I think this might be a game. So as I talked about retesting profit levels, these profit levels may actually go high enough to convince people to invest. Now, this is something I have said before, but I did not think that we might actually go up this high. So if we measure our head and shoulders pattern here, it will give us a price target. So this is the head and shoulders pattern here. Now, I like simplifying this because as I say this, there will still be some people, and my channel of course is optimized for the average crypto investor. So if you're new to crypto and you are watching this video for the first time, subscribe to the channel because this might be the only beginner friendly channel that you might ever see. Anyway, so if you see this head and shoulders pattern here, so this of course is the pattern. You need to learn how to see these patterns without anybody telling you. You need to be able to recognize them. So it is something that looks like this. So this is the head, this is a shoulder, and this is another shoulder. This is the neckline of the head and shoulders pattern right here, which of course we can see this neckline here. So if we measure the head and shoulders pattern here, it will give us a price target of $53,000 here, $53,463,000 here. Now, this is extremely accurate. I made sure that I did it very correctly. I did the measurement very correctly. So this measurement is simply the distance from here, that is from this body right here, to the neckline up here. Now, if it plays out correctly, then this will be the next price target. Keep in mind, it does not mean that we will have a single green candle going up like this. We will have instead pumps and dumps like this. So as I saw this, I was actually like, so if we go up to 53,000, it will invalidate the $20,000 prediction. Now, you might be asking yourself, how will it invalidate the $20,000 prediction? We said before that this right here, let me quickly go back here. This right here was the first boost. So this boost is from July of 2021. Yeah, so this entire rally that we are seeing here is from July of 2021. And this is after the fall back in May. This is the first COVID-19 episode where we had the massive crash. Here I did not worry because I knew that this will eventually go up. So here the bull run could not have just ended here. This was May. It just could not have ended here. So we rallied from here, retested here, and continued the rally. So I do my Fibonacci extension tool from here. So the Fibonacci extension tool comes from here to the top right here. which means all of these levels that we see here are the key levels. Okay, so even with this, I still use this Fibonacci extension here to calculate where the resistance and support levels will be in this new rally here. So as we can see from here, this is the lowest point of this rally right here. We went from here up to here, retraced, went up to here, retraced, here, retraced, and continued up to here, retraced, and went up to here. Now, since this low here is very significant, but it bounced from here and continued to go up, it is a very significant zone that tells us that we are in an uptrend if we continue to go up from here. So this right here is the higher low to this one here. So it is very important. It tells us that we are in an uptrend right here. Now, if we reach a resistance level here and retrace down to here, but go up again just to find another resistance level and retrace, but go lower than the first the initial low here, this starts to tell us that we are in a downtrend. However, this low here is a very important zone. So this, so far as we are not going lower than this, we are still in this uptrend here. But we did go lower than that now, didn't we? Now, as you may have noticed, we continue to form patterns as we go higher or as we go lower. So as we go higher, we form a pattern that tells us where we will go to next. As we go lower, we also form another pattern that tells us what the emotion in the markets is and where we are going to next. But as we can see, this pattern that we formed recently, which is the inverted head and shoulders pattern, is telling us something else. It is trying to invalidate what the other patterns have been saying all along. So the inverted head and shoulders pattern that we see right here is telling us that we will go higher to $53,463 right here. If we do that, then we are surpassing this low here that was the key point, the key level that told us that we are in an uptrend right here. Which means if we go up to here, then not only would we have counteracted this higher low here, we would have also counteracted the head and shoulders pattern that was telling us in the first place that we will go down to 20K and below. So if we close above this level here, then we may as well go back to the all-time highs. Now, some people will be angry, which is why I started the video by talking about biases. If you are biased in this market, you are doomed for failure from the start. Same like relationships. So we see that if we actually go as high as we are talking about here, then we will invalidate all the key levels that we were talking about, all the $20,000, all the $16,700 that we have been talking about for some time. This will all be invalidated. Now, as I looked in deeper into these patterns, as I got lost in the charts, there is something else I saw. Remember I talked about going up as high to convince other people to invest? That is exactly what I saw. Now, the reason I looked in deeper is because I want the information that I bring on this platform to be as accurate as possible. So, I put all biases aside and I looked at the charts just to see that BTC is yet again forming another pattern. If you take the head of an inverted head and shoulders pattern with the right shoulder, it tells you a different story. Now, I will need a bit of confirmation for this because it is not yet shown on the charts, but I think BTC may be forming an ascending, broadening wedge. Now, these wedges are most likely to plummet to the downside when they hit a high price target. So, for example, you would have something that looks like this. This right here would be an inverted head and shoulders pattern right here. Yeah. So we have the neckline here. Now, this is not really good, but just follow along. So we have the neckline here. But if you look at this right here, if this is to break out to the upside here, then you will have something that looks like this. Yes. Now, if you take from here to here to here, this will then become an ascending channel like this. Yes. Now, if you see the price going up like this and it bounces down from here and continues like this, and as it goes up it becomes wider, that will be an ascending broadening wedge. So it is ascending and it broadens as it ascends. So definitely you would have something that actually looks like this. You would have something that actually looks like this. So it broadens as it ascends and like this. Now these wedges usually break to the downside here. So when these wedges finally hit a certain price target here, you will have it break to, so this, let's say the price target will be like here. It will come down here, and a lot of people will continue investing because they think it will continue to do this like this, yes, so that they can trade and make a lot of money. But it will break to the downside somewhere here and screw up everybody that was trying to long this low here. So basically that is what I think might unfold here. So if we expand this, we will see that this can be drawn like so. You will have something that looks like so, like so. So if we see the price come back down here and hit a certain price target here, maybe at 40. Now I don't think we will go as low as 40. I think 42 is possible, because if we take from the 4-hourly time frame, we will see that there is a lot of support that built up right here. So this right here could be the support zone, and we come back here, bounce off from like 42k, and then we continue to rally. I posted this picture the other, like some hours ago on Instagram. We may as well come back down here before we continue the rally. Now of course that will again bring up another pattern, which will be a W pattern or a double bottom. Now I have said it before, it is always important to look at these charts and see what pattern will unfold next. And if you think this pattern will unfold, then what will be the price target of said pattern? So if I think 3 patterns can unfold, I look at the price targets of the 3 patterns and I see which one of them is most likely to unfold. This is how I come down to a prediction and a price target. Of course, with all biases aside, if you have the slightest bias, it won't work. Now, another thing I would like to point out is if we actually go up as high as 53,000 as we were talking about earlier here, that is, if we actually go as high as 53,400 here, then we would have gone above the 0.5 golden ratio here, which is a key ratio to overcome. We would have escaped the golden pocket here and we would have gone higher than the 0.5 golden ratio here, which means we may as well go back to the all-time high. But as I said, the only thing that I think could bring us down will be the broadening wedge or the ascending wedge that we would have built up right here. Now there are some things that I talked about on my other video which I think could bring about a rapid price rush up. But it is important to note that there are more things pressing down on the market than there are things that are pushing it up. And one of them is, of course, stablecoin regulation. And the reason why I am so concerned about stablecoin regulation is because that is exactly how we take profits. Like without stablecoins, you are stuck in a volatile asset. Except of course you exchange it for a piece of real estate or buy a car, which is of course not what everyone can do. So this is a problem. Now, let's talk about the dollar. The dollar seems to be at the brink of plummeting. Now, by the dollar plummeting, it means that BTC will go up. There are some people who don't really get this. One BTC is now worth, say, $44,000. Now, by $44,000, we mean that it will cost 44,000 US dollars to get one Bitcoin. So if the value of the dollar itself goes up, it will cost less of it to purchase one Bitcoin. And if the value of the dollar goes down, it will cost more of it to purchase one Bitcoin. Simple. So now the dollar chart indicates that the dollar will plummet. Let's explain. Ladies and gentlemen, I present to you the US dollar. This chart right here has been trolling us in the crypto space for ages. We see that it had a double bottom here. Now, for those of you who still can't see this, this is the double bottom. You can just call it a W pattern, and if you see a double top, it is an M pattern, because you have, this is basically an M and this is basically a W. Anyway, we see that it had a double bottom, and the price target is the lowest part of this bottom right here to the neckline right here. So if you measure from here to here, it should go up like so, the same distance from here to here. Yes. Okay, so it went up, and as we were saying before, as it goes up, it presents yet again another pattern. And what pattern do we see here? We see that it went up right here in response to its double bottom, but yet again it is presenting us another pattern, which is an ascending channel. We see that it continues to ascend right here until it will reach a peak here. So we could have like a tip right here that it will reach, from where it will either have to plummet or go up. But most of these ascending channels turn to go down. And you might be like, why? The reason is, as price continues to go up in whatever asset, it becomes unsustainable. So it turns to break down. And as it is going up this way, it is very unsustainable, and so we will most likely see a waterfall right here. Now, by it going down here, this means it will cost more of it to buy Bitcoins, which means Bitcoin's price will increase. Simple as that. So simply, the more the value of the dollar decreases, the more of it you will need to buy a single Bitcoin. And this value is most likely associated with inflation. How much of it is in circulation? If we have a lot of dollars in circulation, you will have a lot of it. So having a lot of it decreases its value, which simply means it will cost more of it to buy anything. Now, this happens in everyday life. What you could buy with a dollar in, say, 5 years ago, you can't buy with the same dollar now. So this plays out the same way with crypto, just that everything in crypto is hyper, it's exaggerated, that's the word. So the more the dollar plummets, the more of it will cost to buy any coin, which simply means coins will rally. Now, Bitcoin will rally, yes. What about altcoins? Remember, Bitcoin is simply a compass. When Bitcoin is plummeting, altcoins plummet with it. When Bitcoin is pumping hard, it means money is flowing into Bitcoin and flowing out of altcoins. So they will not rally if Bitcoin is rallying too hard. So altcoins will only rally if Bitcoin is rallying gently, or if Bitcoin has rallied and it is having a consolidation phase. Similar to what we are seeing now. If Bitcoin rallies up to 49k, comes down to 47k, goes back up to 48 and keeps oscillating between 49 and 47, this gives time for investors to go down to altcoins and invest, because they are bored of what Bitcoin is doing. So when these investors go and invest in altcoins, some of them will sell off their Bitcoin positions to invest in these altcoins. This is how the Bitcoin dominance drops, because money flows out of Bitcoin into altcoins. So we always have to be on check with the Bitcoin dominance. If the Bitcoin dominance is increasing, it means money is flowing out of altcoins and going into Bitcoin. This is mostly associated with fear. As the bear market approaches, a lot of investors go out of their altcoin positions and go into Bitcoin, because Bitcoin is most like a safe haven. Not all altcoins that you see now will be around by 2025. Most of them will die. So Bitcoin and Ethereum are like the safest investments you can ever make in crypto. They are assured cryptos that will be around after the bear market. So let's stop all the talking and look at the Bitcoin dominance, shall we? By the way, if you are enjoying this video so far, a like to the video would be fantastic. And yes, I would also like to know what types of videos you would want more. If you'd want longer videos like this one, let me know. If you'd want shorter videos, also let me know. I would want to be doing both, but I would want to know from you what you prefer. So my friends, as we can see, BTC is trying to troll us on the dominance. We see that it descended right here from a double top here, and we fell into a double bottom here. Now I would like to draw this because some people still can't see it. So we had a double top here and we went down, we descended into a double bottom here. So this right here is the double bottom, and we have a head and shoulders pattern that descended into this zone here. Now this right here could be seen as the formation of a bigger double bottom here. Now this bigger double bottom, if this actually happens, then altcoins will bleed severely. However, we do see here that it formed an ascending channel here. Now the ascending channel is caused by this right here. Is caused by a double bottom here. So this is the double bottom here, and we go up here, we hit this resistance, we come back here, hit another resistance, actually closed above it, but started to go again down here. So one of the best ways that this could actually play out here to give us an alt season is that we have a double top, an ascending double top here. That's the way that this could play out to give us an alt season. I'm not saying that it will, but that is just the way that it could play out. So if this turns out to be an ascending double top here, we will plummet from here the same distance from here to here. This of course should give us an alt season, which means money will be flowing from Bitcoins into altcoins. So as you can see, the Bitcoin dominance is much more trickier to analyze. This is literally finding or trying to see how money is flowing, which of course is why it's tricky. So it's just a probability that we might have an alt season, though I actually believe that we will, because there are a lot of investors stuck in these altcoins. They have to pump it up to make a lot of people want to invest. Remember that before you sell, there must be someone willing to buy. It's not like exchanges buy coins from you. No, they are only the broker. People have to actually want to buy those coins and actually buy them for you to sell them. So these investors need to make people want to invest in the first place, which is probably why Shiba Inu rallied the other day and a lot of people FOMO'd in and got wrecked. As you all may have noticed, I only talked about DCAing in crypto one time. I was even planning on making a dedicated video for cryptos that I think might do a killing this year, but I did not, because I know that once I make a video like this, there will be some people who will go and invest and then get wrecked. You see, unlike most other people, I do care about you, honestly. So I will not want to say something that I know you will go and invest and get wrecked. Although I can defend myself by saying, oh, I said it's not financial advice. No. Now, of course, with no financial advice, this is between you and me. I think there are two coins which could do well if the crypto markets actually go up as high as we all think, or as we think it might according to our analysis today. I think Gala and Avalanche might actually do well. Now, there are some reasons to this. Gala and Avalanche have the exact chart with Bitcoin with the inverted head and shoulders pattern. Most other coins are showing double bottoms. Now, I'm not saying double bottoms are not good patterns, but an inverted head and shoulders pattern on BTC shows that BTC will go up. If BTC is to go up and money is to leave from altcoins into BTC, which means most other coins will bleed at the hands of BTC, this does not signal good news for altcoins. However, even when altcoins bleed, there are some coins that do go up. Now, these coins will most likely have the same chart as BTC. Remember that these charts are not only showing you prices, they are showing you people's emotions. So we can basically read what people are thinking. Now, this video is getting very long, and to be honest, I actually thought it would be a 5-minute long video. Anyway, if you did enjoy this video, do me one favor, like the video, comment down below what you liked about the video perhaps, and let me know what you would want me to cover next. Now, I will be doing updates on projects that we have covered on the channel, so stay tuned for that. And yes, if this was your first time here at Understanding Crypto, my name is Eve, and it is quite literally my full-time job to do this. So a subscribe to the channel will not only be good for me and the channel, but will also be good for you. I will leave a link to my beginner-friendly crypto analysis tutorials down in the description. Do your best to watch it if you haven't yet. It will go a long way to make you understand all that we talk about here, and you will also be able to make your own price predictions. Now, I like when I make predictions and people come in the comments and give me their own thoughts. So if you do have some thoughts, let me know down in the comments. And yes, before I go, I would like to answer a question from the previous video. You can pause this video and read the question if you want, but the summary of this question is, why do I still think bull and bear markets still exist? Like, why is that? So, to give a simple answer for this, the bull and bear markets follow the Bitcoin halving. We all know of that, yes? In case you've been living under a rock for the past decade and you have not been following up on the videos of this channel, here is what you need to know. Put simply, every 4 years, the amount of Bitcoin that is rewarded to miners is divided into half. Now, this is simply how the Bitcoin network works. So, as the rewards are divided into two, called the Bitcoin halving, it leads to a surge in the price. This surge is because the demand is still the same, but the supply has reduced by a factor of 50%. Now, the demand is there, the supply has reduced, the price has increased, but where does the money come from? People, institutions, countries borrow money. Now, I'm not saying that countries borrow money to buy bitcoins, but I am talking about every other asset that you might think of. There comes a time to pay this debt. And when this time comes, they sell off their riskier investments to pay off their debts. So if I am invested in real estate, stocks, crypto, and bonds, I will start selling crypto first. It's basically a period where people sell off their riskier investments first to pay off their debts. Now, as this selling pressure increases, you know what happens. Every other person starts to sell. This leads to a sustained period of downwards price action. And remember, we're talking about the crypto markets here, but they also go to other asset classes. So the bear market does not only affect crypto. Think of it as a long-term volatility in price. We can't go up forever. See you in the next video.